Hello, everyone. Hope you're doing well. Going to be going over the latest round of FUD and looking at the technical aspect of things. Going to look at a broader outlook on the daily and weekly chart longer term, and then we'll look at the shorter term action for the short term bounce, which we have been playing. I am still sick, so not going to be doing a whole lot of additional altcoin coverage at this point, and we'll see how long my throat can hold up. But first things first, our latest round of FUD that caused a dump today. And to be honest, we love oversold dumps because that is my bread and butter for trading strategy. That's when I make my most money. And that is what we got today with the report that there was a subpoena sent out to Bitfinex about Tether. Now, if you've been watching this channel for a long period of time, you know that I am a technical analyst and I don't generally talk about things that I don't know about. And so I have not done in-depth research about Tether. I've read the articles, I'm up to date on what it is, but in terms of, doing investigative journalism or anything like that, I am not an expert by any means. So my style, my strategy, my standpoint on things is, yes, it is an additional risk. Just comparatively, let's compare GDAX to Bitfinex. When I trade on GDAX, I go to straight US dollars. That makes me way more comfortable than I would be if I were on Bitfinex and had to go to USDT. So if I were forced to be on Bitfinex, I would probably be trading with probably about 20% the position that I'm currently trading with on GDAX, just because of comfortability and that unknown factor of, is there some shady stuff going on with Tether? I don't want to expose myself to that additional risk. That being said, by eliminating that risk, I have limited trading opportunity on GDAX. I have 4 coins that I can trade. I cannot short. So it's a trade-off. If you want, a little bit higher risk, you're going to get some more features and more trading coins to be looking at. If you do not want to expose yourself to that risk, GDAX is the safer bet. So that's my standpoint. That's why I've always been on GDAX. Again, the FDIC insurance for up to $250,000 is another reason that I trust GDAX more than other exchanges. And it's just my personal preference. It is an unknown to me, Tether. I'm not an expert, so I don't expose myself to stuff I don't know about. So I would absolutely be cautious. This isn't the end of the world. This doesn't mean the exchange is going to close, but you always need to be preparing yourself for the worst case scenario. So you should absolutely assume the exchange is going to close. Assume it's going to close and assume that whatever amount of money you have there, you're going to lose. And that way, anything that happens, you're either prepared for or it's better than expected. There is no worse than expected when you're preparing for the worst. So again, not saying it's likely it's going to close, not saying it's the end of the world, the end of the exchange, but always prepare for that to be the case. That way there's no blind side. You see these videos of these poor people that are just losing their life savings or whatever on BitConnect. And it's just, you see it time and time again, no matter how many times we all say it, it's going to happen no matter what. People are going to do stupid things with their money and they're going to overexpose themselves to risk. And just need to ensure that you're not doing that. Again, when I first put my first money into cryptocurrency, when it was all new to me, the second I hit deposit, I said, I just lost all that money. That money's gone. I'm not factoring that in when I'm doing financial planning. I'm not factoring it into anything. That money doesn't exist anymore. And that way, there is only positive reactions. So that's my opinion on Tether. We'll see how it plays out. Definitely going to be keeping an eye on it. Let's look at Bitcoin. So Bitcoin had a very clear break on the daily time frame that is concerning for the bulls long term, absolutely. So the low of support that broke was 9,945. And the fact that we broke that level is a red flag. Look at the volume behind it as well. We had tons of bear volume. Look at the volume on the dump the original time. It doesn't even compare to the bear volume that we saw today. So red flag. We are still in a clear downtrend on the daily time frame. This is a bear break of the equilibrium pattern. And I'm grateful that I'm trading on GDAX because I got this red flag as soon as we hit this double top. And it was a red flag for ETH, for everything, because it said if Bitcoin can't break bullish, and if we're going to reject from this double top and pull back, we must be very cautious because the bulls have not proven anything to us yet at this point. The trend still belongs to the bears. And where we stand right now, that's still the case. Exponential 12 and 26 period resistance, rejecting multiple bounce attempts and heading back down. So the only support that we have right now in the short term is the low of today, 9,711, and the low of the pullback, 9,017. So the lack of support in the immediate near term is definitely concerning. And again, we're in a position where the bulls have to prove to us that they are shifting momentum in their favor. And right now, we are nowhere near changing this trend to favor the bulls. We would have to see a bounce, a lower high, a higher low, and a higher high. And we haven't seen that yet. We did on Bitfinex, we did see a break to a higher high on the daily chart, and that was ending up being a fake out. We had the hack over in Japan that could have been a potential reason that that fake out took place. Either way, I'm just glad that I was watching GDAX because this double top raised a very early red flag for me that the bulls were not following through. And like I said with the video yesterday, ETH was all Leroy Jenkins ready to go and broke bullish and has now given back the complete move and then some, all because of the Bitcoin correlation and the fact that Bitcoin did not get the clear bull break. So on this daily chart, had Bitcoin broke bullish and made its way up to the mid $12,000 range, I'd be looking for ETH to be pushing all-time highs right now. Because the opposite scenario happened, the ETH bull move is completely erased, and that is why I will always lock in profits and walk stop losses up to ensure that I lock in profits, because just like that, out of nowhere, an entire significant 10% bull move can be erased and then some. So where we stand right now, let's zoom in. The 4-hour RSI did get oversold, which is why we started to look for a bullish entry opportunity. Again, unless it's the end of the world FUD news, I'm always going to be looking for oversold bounces when you get the 4-hour, the hourly, the 15-minute, and the 5-minute. If you give me all those time frames oversold, I'm absolutely looking for a bounce. I've been trading ETH solely, only ETH for the last maybe even over a month at this point. And I am trading 90% of my analysis is on Bitcoin, but I'm trading Ethereum. And that might be a hard concept to grasp, understandably so. But the correlation is so significant, but the bulls are favored in ETH that as soon as Bitcoin gives me a bull sign, I want to be in ETH because that's going to be more magnified by the ETH bulls. So I have been basing every single decision that I'm making on ETH. I shouldn't say every single, but again, 90% of my decisions on ETH are based on the Bitcoin chart. So we're forming a 4-hour inside bar. That's pretty much a sure thing to be set here. We'll be watching to see how that 4-hour inside bar breaks. We just had multiple hourly inside bars. So here's an hourly inside bar, bull break, but not a whole lot of follow through. And looking at it on the 15-minute time frame, still higher lows on the 15-minute. As long as 9,920 holds, the bulls keep control on this bounce. If we break 9,920, it's a red flag. And we can see resistance. The top of this little bounce was 10,243. And then the high of the initial bounce, 10,349. So essentially this bounce is still tightening up. We're seeing consolidation. The volume is dropping off. And the hourly chart is an equilibrium pattern. We have our low, high of the bounce, higher low, lower high, and we're now looking to form another higher low compared to 9,920. How this hourly equilibrium pattern breaks, we'll send out an alert on the 4-hour time frame with the inside bar breaking, and this inside bar is going to form, let's see here, in 1 hour this inside bar is going to close. So how this inside bar breaks is going to dictate direction overnight and momentum. If it's a bear break, this 4-hour RSI will stay oversold and we'll be heading back down to 9,711 and we'll be looking for another oversold bounce entry opportunity. If it's a bull break, I will be looking at an estimated target on Bitcoin for this oversold bounce to make its way to about 10,500 or so. So it all depends on how the equilibrium pattern on the hourly breaks and how it breaks on the 4-hour time frame. How did we know the bottom was in? A very clear equilibrium pattern. Look at the pullback. Look at the volume climax on the 5-minute time frame signaling the absolute bottom. We had our low, high of the bounce, higher low, lower high, higher low. I consider this a lower high because we pulled all the way back to the middle of the equilibrium range and then broke it bullish, that candlestick. I made my bullish entry on ETH on this bull break of Bitcoin. I disregarded what ETH chart was doing and I said, all right, I want in on ETH as soon as Bitcoin gives me the bull signal. We got the bull break and the nice follow through. So checking out Ethereum daily time frame, still very much in an uptrend, still clearly the lead bull out of the three. Support is 987.54. So 987.54 is the must hold level. We will look to form a higher low compared to that level. And again, this just is a perfect example where no matter how strong the individual break is, we're not going to completely break that correlation to Bitcoin and it can completely erase the bull move. We had a 2-day bull breakout. We gave it all back. So the trend is not ruined for the daily chart for the bulls. The trend absolutely still favors the bulls. The weekly chart, multiple inside bars is forming, and that's something I want to touch on in Bitcoin as well. Weekly chart for Bitcoin, actually it broke bearish, so I take that back. When I looked earlier this morning, it looks like we were going to see another weekly inside bar, but of course the FUD ruined that. Not the case for Ethereum. Ethereum is likely to stay with a second weekly inside bar in a row, and we'll be looking for a break of this weekly inside bar next week. Still a lot of days left, but that's the way that it is shaping up to me right now. So the daily chart still bullish as long as 987 holds. 4-hour chart looks like very healthy consolidation. FUD took over, all-out dump. 4-hour inside bar is forming, same thing. It's going to form here, and the break of this 4-hour inside bar will dictate momentum into the end of the day and into tonight. And the hourly time frame right now is a bit of an equilibrium pattern, not as clear as Bitcoin, but low, high of the bounce, higher low, lower high, inside bar on the hourly currently forming. So the RSI at this point has cooled off on all time frames essentially. The 4-hour time frame still has a chance to be oversold on Bitcoin. We're not near oversold on Ethereum on the 4-hour time frame because we're coming from a bullish breakout. But again, I'm just watching Bitcoin to make all my decisions. For Ethereum here on this bounce on the 5-minute time frame, look at this chart. It's nowhere near what Bitcoin was looking like in terms of a clear, picture-perfect equilibrium pattern to play based off of. We had a lower high, lower low pattern, completely different setup. That didn't phase me. As soon as we saw a bull break on Bitcoin, I entered right here, market order full position. A lot of people avoid market orders for wanting to avoid the fees. Definitely a good strategy to try and, limit market orders, but I will never miss a trade because I don't want to do a market order. And this was an instance where once I was confident the low of this bottom was in, and once I was aware that all of the RSI levels were oversold, 5, 15-minute hourly, and then 4-hour for Bitcoin, I was very comfortable using a market order. And I'm much more confident using a market order on an oversold bounce than I am on a bull breakout, especially these days where these bull breakouts don't get a ton of follow through. You definitely need to be aware of it. It adds about, $4 or $5 to your cost basis if you're looking at ETH. But I paid a ton of fees on this market order that I did, and I got filled at 1039 and 1040, scaled out on the way up, still holding 30% of my position to see if the bulls can see continuation and a bull break of this hourly equilibrium pattern. But my point is, the profits that I made on this trade are 1,900% greater than the fees that I paid. And if I told you the amount of fees that I paid on this market order, you'd say, wow, that's insane. What are you doing paying that amount in fees? But when the profit is 1,900% greater, that fee is insignificant and I completely disregard it. So if you're making losing trades, absolutely those fees are going to magnify it and make it worse. But once you're confident, once you have your technical analysis and charts down, market orders should not be avoided. And I would not have anywhere near as many capital gains that I currently have if I tried to prevent from using market orders, to put it simply. Just another quick example, I sold market order ETH at the top. This 5-minute equilibrium pattern, breaking bearish, I exited a swing position with a market sell order, sold all of my coins right here, and I prevented from all of this loss. So again, eating that market order and eating that fee saved me so much more. It saved me thousands of percent more in what I would have given back in lost profits if I were trying to sell on a limit order rather than just saying market order, get me out of this trade. That's a clear bear break. The market's going to react to that signal and following through. Something else I want to touch on, how do you know when to use a market order and when to use a limit order? Think about the psychology of what's going on. So if you're in the middle of a trend and it's not really clear whether it's, it's not an oversold bounce essentially. The psychology of what's going on is not everybody's staring at the chart. I love a clear setup when the levels are so clear that everybody that's a technical analyst is looking at the same thing. Because that means once it breaks, the move is going to get magnified because a ton of traders are going to be acting on it. So here on the Bitcoin 5-minute time frame, because this equilibrium pattern was so clear and because we were in such oversold conditions on so many time frames and because we were recovering from a FUD climax at the low, I used a market order because I anticipated that once we get the signal that the low is in for now, which would occur with a bull break of this 5-minute equilibrium pattern, a lot of people are going to be rushing to get in, and there's no way that my limit orders are going to fill. So that's how it ended up following through. It was a rush to get in, and it's because that was the first signal that we got that made technical analysts and traders confident that our low was in for now, and the bounce was going to get some more significant follow through. So just to summarize again, ETH and BTC, hourly time frame, we're looking for a higher low to stay in the equilibrium pattern. We're looking for a break of this equilibrium pattern, likely within the next 2 to 3 hours. I will exit the remaining 30% of my position on ETH if we see a bear break of that hourly higher low, which right now is looking like it's down at 1040. And ideally, I will hold that 30% and see some follow through up towards 1100. Checking in on Litecoin. Again, I have not been watching Litecoin, and I think a lot of the market is doing the same thing. We had a clear bear break as well, increasing bear volume, looking at support of 158.20 and 135 even. And that's the next support that we're looking at, and it is a clear downtrend on this daily chart right now. Weekly time frame, significant pullback, but again, considering where we're coming from, look at the bull volume on the way up, look at the bear volume on the way down. That's bullish overall. And the overall uptrend is still very much intact from where we're coming from. So at this point, I would say the big red flag would be a break of 135. But again, we're in a downtrend. The bulls have to prove to us that they're turning around momentum. We're rejecting from exponential resistance on the daily time frame. There are no signals that the bulls are changing the trend, which is why as a trader, I am trading oversold bounces in a downtrend and taking my profit when I have it. If I can end up with a big green day when the market is dumping and there's a bunch of fear everywhere, that's a win in my book, and I'll be happily go all cash and assess with a fresh, clean slate tomorrow. And of course, if you can short, this is a great opportunity to short when we're in a downtrend, and every key break of support is a bearish entry opportunity signal. So again, you don't want to be trying to overtrade in this environment. You want to be very picky with your setups and make sure, make the trades come to you. Don't go looking for the trades. Make the trades come to you. And at this point this morning, I was saying, okay, another factor in the bounce that I was looking at was looking for Bitcoin to break 10,000 psychological and get that, kind of volume climax psychological level stop loss order triggering flush. And so I said to myself, once I saw the FUD article hit and I saw us break to a lower low below this level of 10,211, I said, all right, I'm not touching anything until we break below 10,000 and see a bit of a flush, and then I'll start scaling into a position. So, and I actually flipped Ethereum 3 times today, all three for profit, some of them much shorter term than others. So the specific example I'm talking about right now isn't the example that I acted on that 5-minute Bitcoin equilibrium pattern. But again, it was making the trade come to me and saying, I'm not entering this trade unless Bitcoin breaks 10,000 and we get this flush. And if it didn't break that level and didn't flush it, I probably wouldn't have entered any trade. So again, be picky. It's the kind of scenario where this is the whole psychology of trading. If you are trading where you have to pay the bills and you quit your full-time job and you need to make X amount of dollars a day to feel like you're comfortable, these are the kind of scenarios where it can force you to overtrade. And, sitting back and not trading for 2 days, waiting for trades to come to you can, be very stressful because you're not creating income and you need to rely on that income. So that's definitely something psychologically you want to be aware of in this space. And it's also another reason, again, what I keep saying is to expand your knowledge base and to be able to be versatile and jump around to different markets. And all markets are dumping right now. The S&P 500 dumped today, the Canadian sector dumped today, but being able to trade the Canadian MJ sector bearish or playing oversold bounces in other sectors while being patient and waiting for trades to come to you in cryptocurrency relieves that stress. If you're narrow-minded and you have tunnel vision on one sector, it's going to add a lot more stress. It's going to have a lot less opportunity than if you open up to the entire market. And when you can trade oil or natural gas or stocks or commodities or whatever it is, the world is your oyster and there is always something that you can trade. So I'm off my soapbox for now. Ripple. Ripple is in a downtrend. Daily chart, lower highs and lower lows. Every bounce is a lower low. So we bounced here from 122, another lower low at 110, another lower low today at 108. So the next support after 108 is one psychological and then 85 cents. The bulls tried to break bullish. They could not do so. Resistance was 144. We formed a lower high at 141. So it's a very clear downtrend, nothing but lower highs and lower lows. Look at the increasing bear volume. Some of that is bull volume with the lower wicks, but the bull volume candlesticks are not impressive at all in this period of consolidation. So Ripple is definitely favoring the bears. It's the exact same scenario. We're a long way from the daily chart shifting to favor the bulls. We need higher lows and higher highs. The weekly chart at this point, bear break of the inside bar, same as Bitcoin. So definitely very cautious and a significant pullback. And we have to wait for the FUD to blow over. This is the scenario where if you saw, the videos I was making at the end of the year, I took a lot of flack by a lot of viewers, but I was saying, who's going to be buying? Who's going to be buying in the first quarter of 2018? We have the entire rush. CNBC is talking about cryptocurrency and Bitcoin every single day for weeks. Who is going to be living under a rock and not already in this cryptocurrency space that's going to propel this move higher in the first quarter of 2018? My hypothesis was that everybody that's going to hear about it and act on it in the here and now has done so here by the end of the year 2017, and we're going to see buying pressure trickle away, and that's going to lead to some pullback. And that's exactly what we're seeing. And, what's going to be the next kind of catalyst that gets a surge of money coming back in? I don't know. It's going to have to be fundamentally driven. It's going to have to be an ETF, and we just got news a few weeks ago that an ETF is not happening anytime soon. Has to be, Amazon or some Facebook accepting cryptocurrency. Starbucks would be a good start. But until we see these fundamental events, again, it was all hype and speculation in 2017. Now it's show me the money. Show me the fundamentals. Show me the real world widespread usage. That's going to get the money coming back in. And until that happens, we're not going to see significant buying. And again, average Joe and Jane putting in, $500 a month from their paycheck, that's great and it helps, but it's not going to be enough to prop up these markets. It's not the hundreds of millions of dollars that we saw pouring in once everybody was becoming aware of this. Everybody is already aware of this. I'll call it an awareness bubble, where the awareness bubble burst and there's no more, getting ahead of the herd. The herd is all well aware of cryptocurrency and Bitcoin. And again, it's going to be fundamental reasons to see a surge again. So we're not giving up on the space. Absolutely not. There's trading opportunity everywhere. The trade today in Ethereum on this oversold bounce was the biggest day that I've had. And I'm going to have to look back, but I probably made more on this oversold bounce than I did on the Ethereum bull break over 1100. And again, it's just different style of trading, but the opportunity is always going to be there because the volatility is there. And it doesn't matter if it's bearish or bullish. There is the ability to play in both directions or the ability to patiently wait for oversold bounces. So I appreciate you watching. I hope you have a good night, and I hope you do good things.